Hey, ladies. So, this article came out a few days ago with regards to Blackstone. Blackstone is the largest real estate investor in the world. And they had a real estate strategy that was laid out in a leaked transcript, which set the stage for tenant battles over evictions and rising rents. So, let's read the article and find out more. So, they're saying here, a group of tenants gathered in Los Angeles on Tuesday to share stories of cockroach infestations, maintenance issues, and fears of rising rents and evictions with their landlord and one of their landlord's major financial backers. The landlord is no local management company. It is Blackstone, the New York based investment giant that has become the world's largest real estate investor. Nadine Medji is the firm's head of real estate for the Americas, and Kathleen McCarthy, global co-head of Blackstone Real Estate. They were there at the meeting to listen to the tenants' testimonies and defend Blackstone's Real Estate Income Trust, a fund that has come under scrutiny in recent months. So one of the things that I did was I looked up Blackstone Real Estate Income Trust. It is a private company, or sorry, a private investment where only institutional investments can invest directly into that income trust. They do have Blackstone itself, the company, Blackstone Inc., which is on the stock exchange. So you could purchase shares of this and become an activist shareholder if you choose to do so. And the shares are about $100 right now. So if that is something that you want to pursue in order to fight with regards to affordable housing, I definitely suggest it. Let's continue reading. Gina, one of the residents who uses financial assistance known as Section 8 vouchers, told Insider that if a low income resident is relying on housing aid, they won't fix those places up. This is very interesting, this sentence, because I'm reading from Business Insider, and the fact that they put here that Gina uses financial assistance known as Section 8 vouchers. I don't know if a lot of elite people read Business Insider, but the fact that they wouldn't know what Section 8 vouchers are, if a lot of well, not upwardly mobile, but just upper income people don't know what Section 8 vouchers are, that says a lot about our country and about the fact that people from different classes don't know the plights of other people. But let's continue the article here. I thought that sentence was very interesting. It says here, the meeting in Los Angeles this week is emblematic of tensions building between tenants and their powerful landlords. The last eviction bans aimed at assisting people through the pandemic are expiring in some parts of the US, which is worrying tenant advocates. Investment companies like Blackstone are projecting that they can benefit from these eviction restrictions lifting, and rents they expect to rise across properties, including designated affordable housing and student housing. In other words, ladies and gentlemen, if you are living someplace where you are still protected by the pandemic eviction bans, watch out, because if Blackstone and some of these other companies own your properties, the rents are going to go up astronomically. You're either going to have to get a roommate, you're going to have to house hack, or you are going to have to leave. And that is for affordable housing as well as student housing. Just last month, remarks from Medji, who is one of Blackstone's people, during an internal company call illustrated the firm's strategy to that end and why it is so confident in the future of Bright. He said, quote, today on the ground, we're seeing 5% rent growth. They said during a December 5th call, we're also seeing a meaningful increase in the economic occupancy as we move past what were voluntary eviction restrictions that had been in place for the last couple of years. So they're betting on rising rents for low-income people and students. They're saying here that, I'm skipping that part, We're a big owner of student housing. And in our student housing portfolio, we're signing leases today for the academic year at 9% higher rents than this year. So next year, next academic year, starting in September, young people and their parents are going to be paying 9% more. So we know what this growth will look like. He's also saying we also have a big affordable housing portfolio where rent growth is a function of inflation on a lag. Here, too, we know what growth will be next year. It is going to be in the high single digits, so probably 8 to 9% increase in your rent for affordable housing. Bright has $68 billion of assets and has a 3-year annualized return of 14.9%. Just over half of its portfolio is in rental housing, and 97% of its holdings are in the United States. So, one of the things that any investor in Bright wants to do is they want to have a return that beats inflation. So if inflation right now, it was 8%, 9%, is going down a little bit now to about 6%. If they're at 14.9% per year, that's what they're looking for. So this is business in a way where the people who run Bright and who run any of these portfolios, they are mandated, corporate mandates, that they have to maximize shareholder value. So they are doing that by focusing on purchasing a whole bunch of rental housing and jacking up the rates. There are two ways that you can look at combating this. One is an overall care for people and being able to, you can't purchase directly into Bright, but you can purchase BlackRock shares and doing activism that way. You can also purchase different kinds of real estate investment trusts or REITs on the stock market and doing activism, shareholder activism. The other thing is purchasing these things in order to hedge against inflation within your own household. So becoming a shareholder in these REITs in order to have some of the pie that they are getting, it may not sound like something that is fair, but at least you are not losing as much as if you were to not participate in what's happening, just overall. Hope that doesn't sound totally callous, but just have a couple of more sentences here. When we talk about cash flow growth, they're saying we're not really speculating for next year. We have a really good sense of what that will look like. Private equity firms are aiming to cultivate friendlier public images for new generations of consumers and investors. Blackstone has tried to counter its reputation of a brash Wall Street behemoth buying up houses, for instance, with warm images of smiling families on its website and a $1 billion program to lower rents for some tenants. So basically, they're going to have a big PR campaign. I wouldn't be surprised if they end up changing the name of some of their REITs and some of their LLCs and things like that from Blackstone to some other company, so you don't know Blackstone really owns it. They want people to feel warm and fuzzy. Instead of saying, damn, Blackstone just bought my apartment building, they want you to be like, yay, Blackstone just bought my apartment building. I don't know if they'll ever get there, but that is what they are trying to do. And let's be real, ladies, they probably have some very smart marketing and PR people, crisis people like Olivia Pope was, helping them navigate this so that they can come off smelling like roses. So again, this is the CEO of Blackstone. His name is Stephen Schwartzman. And this is what they're doing with real estate. So I definitely suggest you, take caution with regards to real estate, become a homeowner if that's something that you want to do, because at least you can have a stable housing cost, and participate in purchasing REITs. You can't purchase this specific Blackstone REIT, but there are other, you can purchase the Blackstone stock, like I said, or you could purchase other REITs and get a dividend from those REITs that you are purchasing. All righty then. I will see you ladies in the next video. Ladies, do you own a small business? Want to get grants for business loans, credit cards, or other types of funding? Then click my link in the description to get all the information.